If you want to beat the market, it's quite simple. Don't be the market's bitch. And you've heard me say that time and time after time, again and again, guys. It's very simple, okay? Your goal as a trader is not to focus on the current candle when you're looking at your screen. Sure, it could be a sequence of green candles. It could be something that is happening now that's got nothing to do with what the market is actually going to do next. Yet, too many people are getting brainwashed by the green candles. And too many people are missing colossal opportunities in the market. Okay? Thank God that we have these type of market conditions right now that are completely reminiscent of 1973, okay, October 1987, and transition from 2007 to 2008. That's exactly what those years have in common with what's about to happen in October of 2025. Now, I'm actually recording this on September 30th, 2025, to basically describe to you what's about to happen in general terms. Now, I'm not going to be revealing specific trades here that are about to go 20, 30, 50x, and some trades we're about to take even going to go 100x plus, guys. But it's the market conditions that I want you to bring your attention to, guys, okay? And I'm going to take a look at this history quickly with you, just to refresh your memory, because after a day like today, where the market at the end, you just green candle after green candle after green candle, it's very easy to condition yourself to think, well, hey, we're in the biggest fucking bull market the world has ever seen, right? And yet, the history spells exactly the opposite, but because you're so mesmerized on focusing on what is taking place right now, you're literally focusing on the candle that is happening right now, and it is the green candle, that you completely misprice the opportunity of what is actually about to happen next. So the two charts I want you to really focus on to understand what's really happening in the market is the chart of gold and the chart of oil, okay? Now, if you go back to 1973, okay, in 1973, well, slightly prior to that, but the real big move in gold begins, 1971, 72, 73, but it really takes off in 73 through 1980. So that 7-year time frame in gold, it goes 11x while the market drops 50%, bounces, drops again. And so the market basically for 7 years, the indexes like S&P 500, they don't do shit. It's like the last 7 years. You've heard about the lost decade in Japan and, so on. Well, that was the lost 7 years in the market that nobody seems to remember right now. And the economic conditions are a perfect match. Yet people choose to ignore it. Why? Well, because everybody's brainwashed by AI. So what was happening in 1973 is identical to what's happening now. It's the case of a severe stagflation. And in 1973, the Federal Reserve made the same mistake. They actually cut interest rates into stagflation. The market crashed 50% within 6 months. I'm here to tell you it's exactly what's about to take place. The reason the market has not priced the stagflation case, or even barely began to price it. There's clearly certain market sectors that are beginning to price stagflation. But if you take a look at historic chart of gold, gold outperforms absolutely fucking everything in stagflation. So you cannot ignore when gold goes up 50 points almost every day. Okay, you cannot ignore that. Hold on. The last time that happened was 1973 through 1980, which was the last instance of stagflation when it comes to United States economy. So gold is literally screaming every day, 1973, 1973, 1973, but yet market indexes are acting as if, okay? It's 1999, 1999, 1999. Well, at some point, okay, there's going to be a major repricing because, well, it's either, okay, we're looking at the gold chart and, I mean, we're not seeing it for what it is, or it's the chart of the indexes that's about to get corrected to historic norms. And I think the latter is correct. If you heard me over the last I don't know how many, fucking 30 podcasts, I've been telling you, gold, buy the fuck out of gold. I mean, some of the greatest trades we've caught, in the last few weeks were just gold calls. Buy gold fucking calls every day. Gold has outperformed fucking AI. I don't know why when you go watch these news, they're all so fucking focused on AI, out of their fucking mind. But yeah, there's like so little coverage on gold and stagflation. So I think you're about to witness in October of 2025 the shift in the general media that covers, financial topics, where they're going to start spending a lot of time covering not just, okay, well, the gold is going higher, but why is gold going higher? Okay? Because if you nail the reason why gold is going high, you're going to nail all the other trades as a result of that. Okay? Now, in the title of today's podcast, I specifically picked up 1973, 1987, and 2008. And all of these time frames have a direct link or similarity or rhyme or, components of what the market is currently representing or doing. And based off all of these time frames, we're about to go into a major shift in the opposite direction. And many sectors have already begun doing it, such as, for example, if we look at last week, okay, we had a major report from CarMax. CarMax not only sells more pre-owned cars than any other company in the United States, but it also provides financing. One of the biggest things that they have mentioned during their earnings call last Friday was the fact that delinquencies are up in a big way. On a year-to-year basis, delinquencies are up 26% from where they were just a year ago. Now, the market brushed it off. Like, majority of the automotive stocks did not crash. Tesla didn't go down, but just a little bit. Carvana didn't go down, but just a little bit, which by all definition and means should be fucking collapsing, but it hasn't collapsed yet, just like the rest of the market has not collapsed yet, but we're super fucking close to that moment. But the market is just brushing things off, like the CarMax report, with basically telling you we are so close to 2007, 2008 conditions as far as this sector of the market which deals with automotive loans. Yet, every goddamn Wall Street analyst is screaming how financials are the greatest buy. They're the next technology sector because they're going to be transferring stocks, from current shape onto the blockchain and so on and so on. And so all of this is great, sure, okay, but it doesn't take away the fact that the reason why 2007, 2008 financial crisis took place, because too many people lost their fucking job within too short of a period of time. They couldn't make their payments to the banks, and the biggest defaults were due to the crisis in the mortgage industry. But it wasn't just the mortgage industry, right? I mean, the mortgage industry is sort of the last brick of the foundation of the financial system. So normally when a person loses their job, the first thing they're going to stop paying is their credit card. The second thing they're going to stop paying is their car payment. And the third thing they're going to stop paying is their mortgage. It's normally in that sequence. Now, Capital One took over Discover Financial in not so distant history. And if you analyze Discover Financial history, like every quarter prior to the Capital One COF acquisition of Discover, they've had warning sign after warning sign after warning sign. The delinquencies are on the rise. Now you got CarMax is telling you that delinquencies are up 26 fucking percent on year-over-year basis. Okay, and you got Florida real estate market that is already, based off the number of homes offered for sale in certain counties in Florida, guys. I mean, you're already surpassing the availability of properties. If we examine the situation 2007, 2008, the current situation is already surpassing that. And this is just the tip of the iceberg. And mainly, I mean, people are getting the fuck out of their condos in Florida because what? Well, it's the insurance cost, right? They're going to sit here and tell you how the PCE is at 2.7, the inflation is staying 3%. We all know these fucking economic reports are garbage. When people are abandoning their condos because they cannot afford homeowners insurance, because they cannot afford mortgage insurance, because they cannot afford, simple stuff when it comes to home ownership, okay? I mean, it is not a sign that you could overcome with AI, okay? Because just think of it this way. They're letting thousands and thousands of people go every day in various areas of what, let's say, call it the old economy versus the AI economy. So thousands of people are being laid off. Thousands of people are losing their jobs every fucking day right now in the United States. In the old economy. In the new economy, which is AI, companies like Microsoft and so on, they're laying off dozens of thousands of people as well. So between the old economy and the new economy, you have one common denominator, which is a substantial loss of jobs, which is not yet reflected in the economic data that we have seen, but it will be because it's going to be impossible to hide it. Under such conditions, financials cannot do well. When 90% of the economy is impacted by people who are not able to make their financial obligations, people letting their condos go, people letting their homes go, people letting their cars go, do you think they're still paying their fucking credit card? Hell no. But it is not yet priced in the market. And it certainly is not the impact of 90% of the economy collapsing in the United States. That impact is not yet priced in the AI stocks. Certainly, AI is the fastest growing sector because of the amount of money that's getting spent on data centers and so on. The question is simple. If 90% of the economy is collapsing, is that good or bad for AI-focused companies? And today, I think we have seen it in black and white. And for whatever reason, the market is fucking celebrating it. But I think what we got today is so bad for the market that, I mean, shit. I mean, this is kind of like Bernie Madoff type situation that's going on with NVIDIA, and yet the market is applauding it. Basically, NVIDIA is selling chips to CoreWeave, which NVIDIA owns a part of CoreWeave. Now, CoreWeave using the chips to build out the cloud. But it's NVIDIA that's bankrolling the entire process. So how do you actually account for those type of customers where you basically imagine you're a business and you utilize the money from your business to bankroll your customers? You say, well, hey, you're going to be my customer. Hey, I'm going to give you the money to buy my products. And then once you utilize the products I sell you to produce a slightly modified product, I'm going to buy that shit back from you. okay? Guys, that is a sign of big trouble for fucking NVIDIA, okay? Because if you think of it, 90% of companies are doing shitty. The economy is going to hell, okay? And what's happening, you see big technology companies, and I just gave an example of NVIDIA and CoreWeave, but the same shit is happening in NVIDIA and Meta and Apple. Okay, so let's say the world's top 20 companies are making a deal between each other and they're bankrolling each other, okay, to produce so many products and services. Well, the question is, okay, it doesn't matter how big these companies are, at some point there is a limit on how much demand they create, even if they're bankrolling their own products and services. So, to me, this matter is simple. I mean, this pyramid is going to absolutely fucking collapse. The question is, when is the market going to price the fact that if 90% of the economy is not doing well, it's also not a good thing for the few companies that are heavily investing in the AI space. And for whatever reason, that shit is not priced in anywhere. Now, we can go back in history. 1986, 1987, okay, the market was doing the same thing as it's been doing for the last 6 months. The market just didn't give a damn about a damn thing. And there were some bad news in 86, in 87, but the market just ignored everything and it kept going higher and higher and higher and higher, fucking higher, until what happened? Well, October 19th, 1987. Okay, I don't care how long you've been trading, okay? You got to be aware of the date and what happened on October 19th, 1987. And that's why I put that in the title. So on one angle, we have a situation currently in the markets that resembles that of 1973, right before the market collapses 50% within 6 months. Okay. And that's attributed to the gold versus the rest of the market top situation. That's clearly screaming at us every day. Stagflation, stagflation. Every day you look at the gold chart, it is screaming stagflation. So 1973. Then you have the market right now that ignores absolutely everything. Good news, bad news, fucking, which 99% of the news that's coming out every day, they're really negative for the market, but it just brushes it off. So that's the comparison to the 86 and 87 top situation. We know what it resolves into. A one day 27% fucking drop, which, by the way, that would be like S&P dropping from 6,700 to back to 4,800. So guys, we're not talking a small drop. I'm talking about a one day fucking drop where S&P drops 2,000 points. I mean, the entire Wall Street will puke their guts out. Do you understand the kind of situation I'm trying to describe to you? And it actually has a probability of happening in October of 2025. And then let's switch gears a little bit and look at the oil chart, which despite of World War III, which shockingly, some people still think, oh, we're on the verge of World War III. World War III has been fucking happening now for 2 years. And despite of World War III and all the geopolitical tensions, okay, oil cannot get its out of its own way. It keeps fucking dropping. So, if oil cannot rally on geopolitical tensions and World War III, then what's driving the oil prices lower? Well, it's the fucking economy, stupid. It's the fucking demand for oil is dropping. In simple terms, those people that are being laid off right now that don't have a job to go to tomorrow, do they need to wake up tomorrow morning and go to a gas station to put gas in their car? The answer is fucking no. So there it is, a simple explanation to what is happening to the oil demand. So oil prices are dropping. At the same time, you got multiple catalysts for oil to drop even lower, okay? The Saudis, all the OPEC Plus members, they are continuously agreeing to raise supply. And they're doing it at the moment where demand is dropping off the cliff. So if you take a look at the gold chart, okay, you're looking at 1973 stagflation. If you take a look at the oil chart, you're looking at oil 2007, 2008 scenario and catalysts. So that's why I've put in all these time frames in the title of this podcast. 1973, October 1987, and 2007, 2008. Guys, it's very simple. You don't have to be a rocket scientist to figure this shit out, that we're very much, okay, I don't know if we're hours or days away, but we're not even months away. We're not even weeks away. We're within a few hours, maybe 2-3 weeks away from a major fucking, I'm talking about one day crash where you're going to look at your computer screen and you're going to think that something is wrong with your screen, because there's going to be this one big fat red candle. It's going to be going lower and lower and lower, and all the people that are buying the dip, okay, that are thinking they're getting a good deal, are going to be closing that position 10 minutes later, because they dipped that thought they were buying that was such a good idea. 10 minutes later, that shit's going to be 5% lower in S&P, 7% lower in S&P, 12% lower in S&P, and I'm using S&P as a barometer of the overall market, but I'm not even talking about individual stocks. Like when S&P is going to be dropping fucking 5, 7, 12, 13, 20%, possibly in a single trading session, some stocks are going to be dropping 40, 50, 60, 70 fucking percent. And I'm telling you, that day is about to happen between today's September 30th. So between October 1st and October 20th, I would say that day's fucking coming. So go look at the charts I've referenced. Okay, there's going to be a ton of money to be made. Not on buying the dip. Please, God forbid, do any of you fucking buy the dip. You will get slaughtered. So, people are at a moment where they're so mesmerized by the green candle and the continuation of the market moving higher, where they hear the news from the general media that, hey, the market is just going to keep going high because, well, hey, the Federal Reserve is cutting rates. The conditions are so good. The productivity is only going to go up because of AI. All of this garbage, right, that is just completely taken out of the context, and nobody's asking the right questions. Well, how is AI demand going to consistently go higher if you got record number of bankruptcies, smaller size companies closing up shop, going out of business, millions of job losses? How's that going to create additional AI demand for AI products and services? How the fuck does that have a remote economic chance of happening? So when that is going to be priced in, you're going to hear companies like Meta that's committing, like, what are they? I mean, at one point I just lost track of how much Meta is spending on their data centers. I mean, it could be, for all I know, at a fucking $1 trillion, right? But they're going at like 100 billion a year. So over the next 10 years, it wouldn't be shocking if they spend a fucking trillion, right? But the question is, that's what's currently priced in. But how would that get repriced, okay, if it is apparent and obvious to all the market participants that old economy is collapsing, and the repercussions and the domino effect. Okay, all the analysts that are telling you that it's a good idea to buy financial stocks right now, when these companies got billions and billions of losses from bad home loans, bad mortgages, okay, bad credit cards, delinquencies on auto loans, billions of dollars of losses from, loans. United States economy is based on fucking loans. Nobody owns nothing in fucking United States. Everybody's borrowing money for everything. And there's one condition, okay, that needs to be intact for everything to operate smoothly. And that is the condition of cash flow. So if millions of jobs are lost, then cash flow for many people disappears. Okay, cash flow may not disappear for some businesses that are bigger size, that can maybe liquidate some assets to create some extra cash. But, many businesses in the United States operate based off the credit lines, based off the loans. Okay, and when sales drop off, okay, they cannot make payments on those loans. So far, I've talked about auto loan delinquencies, mortgage delinquencies, credit card delinquencies, but there's a whole nother category of commercial lending delinquencies. So this domino effect, guys, it's unstoppable. One small company, let's say, that employs, 30, 40 people, that goes out of business, I mean, that's 40 people that are going to lose their home. Again, that's 40 people that are not going to pay their credit card. That's 40 people that are not going to pay their car loan. Oh, maybe some people got a little bit of savings. So, maybe some of them are going to be able to postpone that for a month, 2 months, 3 months. But what comes on month 4? And my argument is simple. Some of those jobs that were lost, that the poor economic reports, poor in the sense that they're not accurate, okay, that they did not cover that 3 months ago. Well, it doesn't mean that thousands and millions of people already were not losing their jobs 3 months ago. So maybe some of those people were able to maintain some type of payment on all their shit, but they're now at a moment where there is no more payments they're going to be able to make. So for Wall Street analysts to come out and say, hey, it's a great time to buy banks, financials, they're out of their fucking mind, okay? Banking stocks are absolutely going to collapse. We got one bank stock that I think is going to drop 90%, and it could make you 500x. And if you want to know what that stock is, guys, you got to get in touch with us. Okay, get in touch with the coach here at 13 Market Moves. Now, understand, we're trading options on these stocks. We're trading options on futures and so on. But there's some sectors of the market that are absolutely, in the month of October 2025, they will drop by as much as 90%. You just got to laser pick them. Okay, sure. The market, the indexes are going to drop, but there's some things that are going to drop by a lot more than the indexes, okay? And guys, we got the golden list, all right? And Bitcoin is not on that list, all right? It is on the list of the shorts, while the rest of the world thinks that miraculously, if what I just described to you is going to happen, the base case is that crypto goes up. Now, I think if we had crypto in 1973, crypto would have corrected just like the rest of the market to the downside, not to the upside. And I've voiced that argument over multiple podcasts in the last couple of months, despite of Bitcoin moving higher and crypto moving higher, despite of guys like Tom Lee saying that Ethereum's going to 64,000 and shit like that, Bitcoin's going to 1 million. Sure, maybe at some point, maybe in another life, by the time I'm no longer here, okay? But guys, it ain't gonna happen in 2025. Just be ready for a major fucking market correction by as much as 50%. And the way the market has been, if we take these time frames, historically 73, 74, that was 6 months. 1987, it was just one day, 20+% drop that was also preceded by, some smaller drops prior to the big one-day drop, right? I mean, this whole 50% drop could happen like in a matter of 30 days. And it is like people have not even begun to price what I just explained you. I mean, people are so brainwashed on this AI, like AI is just in its own space, like AI is not connected to the rest of the economy. Like AI can just survive on its fucking own, like AI does not need customers. Like NVIDIA just can keep bankrolling its own products, and buying basically its own fucking chips to post big numbers. Well, that shit is only going to last for so long, and none of it is fucking priced. So I'm here telling you that the market is going to go real fast through some of the greatest repricing situations the world has ever seen. And the biggest fucking real estate property you can buy right now is put options. The biggest fucking bet you can make is against crypto right now. Not buying crypto calls. You buy the fuck out of crypto puts. And there's some, like, believe it or not, there's like now you can even trade options on meme coins. And there's like 20 meme coins I know right now that are absolutely going to go fucking 99% lower from where they're at right now. And you can trade them with options. Like, people are talking all the time how, this shit is going to go up and this shit is going to go up and this shit is going to go up. And, sure, it's the easiest thing to talk about when every day you open your screen. Oh my God, another green candle. But like, I'm telling you, nobody is prepared for how fast this market repricing is going to happen. People are so brainwashed. Nobody thinks the market can drop by more than 60 points on any given day. All the machines are programmed to buy the dip up to 60 points lower on the indexes. Like, everything that is taking place in the market right now is leading to perfect conditions for the greatest market repricing in history. And this is at the moment where I literally went and I looked at all the analysts, and I was just trying to find a single bear on Wall Street. And there are none. There is zero bears on Wall Street. Zero bears. Which, I mean, you can't stop me from betting against them idiots. They're so goddamn brainwashed on the AI. Oh boy. I mean, I don't know how else to say. These are perfect market conditions. Market is absolutely going to fucking drop. The question is, what are you going to do? Okay? Are you going to pull the trigger? Are you going to be hearing stories of other traders here at 13 Market Moves making millions again, okay, while you're sitting and watching the red candles on your screen and you can't believe it? And the reason you can't believe it is because you're so brainwashed by watching the green candles for the last 6 months that when the big-ass red candle finally hits the market, you're going to be sitting there in disbelief. So, again, you want to beat the market, don't be the market's bitch. In other words, don't focus on the green candle today. Be prepared for the biggest fucking red candle tomorrow.